Hey, what's up guys, welcome back to the channel. Today I wanted to speak to you about my dividend investment strategy and what I want to change into my portfolio. Well, if you don't know me, my name is Alexi and I invest into dividend companies for the simple reason that I want to start creating a passive income flow coming to me every single month or so. All these passive incomes are reinvested into my portfolio to create more passive income, etc, etc. That's called compound interest, and that's my strategy with this portfolio. I did something in my portfolio that, in my opinion, wasn't the right idea. I started diversifying my portfolio in many companies. Let's go into my computer and I'm going to show you what I'm speaking about. So here on this page you have all the stocks that I own. You can see that it goes from American Express to Target to Walgreens, Wells Fargo, Foot Locker. I got quite a bit of companies here. Now, it's great, and as Warren Buffett said once, diversification is a great way to combat ignorance, which means that for a new investor, diversifying your portfolio in a lot of other companies might be a great way of seeing great results because you can't really fail. The more companies you invest in, the more it will follow the market. But then what is the point of diversifying your portfolio so much that at the end of the day you have the same thing as if you own a S&P 500 index fund, for example. So right now what I would like to change is actually to change the diversification into this portfolio. I don't want to own all these companies because as great as diversifying might be, you don't have a full control of your investments. I don't know all these companies perfectly. Some of them I'm really familiar with, but some of them I just maybe never used them and I bought them because I was interested into the dividend payments, but I don't always know what the company is all about. In a big scale, yes, I know what a company is about, but I don't know the business. And for a new investor that want to invest into a mutual fund, you should know at least what you are buying, why you are buying this stock. Do you really believe in this company? Have you ever used this company before? And right now I'm stuck in a situation where I see two things. On the one hand, you have the diversification. You have the beginner way of investing where it's okay to be ignorant. It's okay to be new to the market and it's okay to invest your money in a lot of companies. On the other hand, I would love to diversify less, have less sectors in which I invest because I want to know more about the companies I invest in. I want to know and I want to be sure about a company that will do great in the future. Right now is a time where things are changing. Things are disrupted by everything that's going on. And all those companies that I own, well, some of them maybe won't make it out of this. So I'm stuck between two choices. Either I diversify everything and I buy a lot of companies that I'm interested in, or I buy 5 to 6 stocks that will be about 70% of my portfolio, that will be stocks that I really believe in, and the last 30% would be into maybe the S&P 500 index fund or an ETF or something like that. But I'm stuck between those two and I don't know what to do. Should I invest into 5, 6, 7 max companies with a 10 to 20% place into my portfolio? Or should I diversify like I'm doing right now and having a lot of companies that I own? That's the question that I have for you today. If you know about investing, let me know in the comments down below your strategy. Are you diversifying your portfolio a lot like I am doing right now? Or are you buying fewer companies but with a bigger amount and a bigger place into your portfolio? So this was the first thing that I wanted to talk about. Next thing is, will the market in the future crash again? Because as we saw in the last 3 months, the stock market had a strange behavior. I mean, at first everybody was starting to go on lockdown. Every cities were closing businesses and every countries were saying to their citizens to stay at home. So it's really difficult for a market to function correctly and for an economy also to function correctly when everybody is staying at home. So we saw a huge decline into the market, about 30 to 40% in some markets. My personal investments went down 33%. Right now I'm down about 7.8, so it recovered quite a bit and I'm going to invest more and dollar cost average more over the next month or so. And if you don't know what dollar cost averaging is, it's investing a consistent amount of money every single month, for example, because for example me, I'm doing $1,000 every single month into this portfolio that I invest even if the market is up or down. If you're interested into this kind of investment, you can go and check out this video right here that I made a week ago, where I spoke with a financial expert about is it better to lump sum invest or dollar cost average invest. So go check it out. It will be right up there. But what I was saying is that the stock market went down quite a bit in a really short amount of time. People got really emotional, got scared, and took the money out of the market. But at the same time, people like me started investing, thinking that it was a great opportunity to make great returns over the short term, even though I'm aiming for long-term investments. On the short term, it was a really great idea to start investing right now, since the market was down quite a bit. And the market bounced back. As everybody was not expecting, the market didn't continue going down, but bounced back instead. And there are a few reasons for that. Some may be that, for example, the Feds are printing money like crazy and investing it into the market, or giving it away to people in the form of stimulus checks, which is, in my opinion, the wrong way of doing it. I know that it's important for people to have cash on the side and to be able to just live, but those stimulus checks is just more debt that the country is creating, and inflation in the future, and especially this year, will be really bad in my opinion. Money will lose value and your investment will be worth less just because they printed so much money. But I'm going a bit off track right now. The market bounced back and went up almost 20% in a really short amount of time also. And people are getting frustrated because since the economy was doing so bad, why was the market going up 20%? A lot of people ask themselves, why and how can this happen? Is the government manipulating the market into going up all the time? Or is it just that people are realizing that the market is disconnected from the economy and that the market may go up even though the economy might go down? What I believe is going on right now is that we are in a sort of a bubble, something that might explode into the near future. And there are three scenarios that I may see in the future. First one being the economy recovering, and in the near future, so it will be 2 to 3 months from now, we'll see all-time highs into the market like we did right before the coronavirus. Scenario 2 would be a more realistic approach where it takes more time to go back to where we were, and employment rate will stay pretty high, and yeah, it may take maybe years to come back to where we were, but this is a more realistic approach to what may happen in the future. And the third scenario would be a recession that is lasting quite a long time. This may very well happen, and we can't tell what the market will do in a month or so, because right now is the time where the market may be the most volatile ever. But should you really care about the market going down? Well, for myself, I'm not really worrying about this. For the simple reason that, as I just told you before, I dollar cost average my investment. It means that the lower the market is, the cheaper I am buying my stocks. So for me, a market going down means more stocks that I can buy, and in the future, a better growth. But this is not the case for everyone. If you're investing into growth companies, companies that you think will do great into 2, 5, 10 years from now, you're in a situation where they might go out of business without you noticing, and you losing money on this. This is why I believe that people should always invest into the long run and not into the short term, because short term is so unpredictable. If you choose a company because you know that in the short term it will do good, well, I'm sorry, but it may also just go down and you have no power of this. But if you invest into a company that you believe will do amazing in 15, 20, 25 years from now, you have so much more potential to see green into your portfolio, see a big growth going on. And also, if this company is paying you dividends, well, every single 4, 6, 12 months, you get dividend payments that you can reinvest into this company and see an exponential growth. So what should you do when the market is going down like it is right now? Even though the market in the last weeks or so have been high, you never know what's going to do in the future. So what should you do when the market is in this situation right now? In my opinion, the first thing you should do is aim for long-term investment. There is no speaking about short-term right now. People believe that the stock market was going to go down more than 30%, maybe 50% or so. What it did instead is that it bounced back 20% more. So right now it lost about 10% of its value, depending on which index you are watching. So you can't predict in the short term the market volatility. And so many people lost money because they thought, oh, great, it's going to go down. Let's just short the market. And guess what it did? It went up. So you should have this long-term view on investment for your money to grow, your accounts to grow, and your financial life to grow. So do I believe that the market will go down again, will crash again in a few weeks, months or so? Honestly, I've been pretty optimistic about the whole situation. So since the very beginning of this pandemic that started a few months ago already, I was actually watching the growth of the illness, how contagious it was, since there was 600 people infected. And I knew that there was something strange about this sickness for the simple reason that people were documenting it so much. I mean, 600 people infected, and it was already something big. So I almost instantly knew that something was about to happen. I didn't think it would grow that big, honestly. I would maybe think maybe an epidemic or something like that, but a pandemic, I would never thought about this. So my strategy from the very beginning was long term. I'm not really worrying about my investments, but will I believe the market will go down in the future? It may go down in the future, but I really think that if we can start opening stores right now, if we can open malls, if we can open parks, if we can start to recover the life we had just before, things will do good in the future. We'll see into my next monthly update how everything will turn out. But yeah, I'm still gonna invest into the market. $1,000 every month was the plan, so I'm gonna follow my plan. Also, in the next month or so, I'm gonna change my dividend investment strategy to something that I have more control over it, because I believe that right now I have too much diversification going on into my portfolio, and I would like to maybe narrow down and go to 6 to 5 stocks that are about 70% of my portfolio, and then I have a 30% investment into, can be the S&P 500 or an index fund that is following the market, because I like the way that you can diversify your portfolio in a way for you to have safe investments, and that if one goes down, maybe the other will do good and you have no problem. But in a situation where we are right now, where you can see here that I have quite a bit of red into this investment portfolio. Some of them are minus 50%, some of them are minus 2%. It really depends on the company. But overall, I believe that it's better to invest in just a few companies that you really know and really believe in, rather than having a huge diversification. So in the next month or so, I'm gonna go a bit deeper into this and maybe change my strategy a little bit. I'm probably gonna make a full video about this one because it's a really interesting subject, so let me know in the comments if you're interested. If you like this kind of content, well, I have this video right here that was my last monthly update, and you can go and check it out right now. I also have a lot of other content on my channel that you can go and watch right now. I hope you enjoyed this video. It was your host Alexi, and I'll see you guys next Saturday. Bye bye.